and welcome to World Insight with me, Tian Wei, coming to you live from Beijing on CGTN. We begin our program today with trade tensions between China and the United States. It is feared that the trade friction between the two countries will spiral into a currency war. U.S. President Donald Trump once again attacked the EU and China in a tweet, accusing them of all manipulating their currencies. China was very quick to rebut the claim, and international financial institutions like the IMF said the yuan's movement is in line with the market. Before our discussion, here's what happened so far.
It went short of a currency war. China's foreign ministry rejected the U.S. president's accusation of exchange rate manipulation, saying market forces are driving the value of the Chinese yuan.
The value of China's currency depends on its demand and supply. It is normal to see it fluctuate. Right now, China's healthy economic performance can ensure the exchange rate of its currency is at a stable level. China has no intention of spurring exports through competitive devaluation of its currency. That stance will not change.
The Chinese yuan has dropped significantly in recent weeks as trade tensions with the U.S. have worsened. Mr. Trump said China, the European Union, and others had been manipulating their currencies and interest rates. He also slammed the Fed for raising benchmark lending rates, which, he said, eroded America's competitive edge. However, the International Monetary Fund said the Chinese yuan's movement is in line with economic fundamentals. The IMF and many U.S. economists say Mr. Trump's accusation simply doesn't hold water.
I don't see any evidence for currency manipulation. The exchange rate has returned to about what it was in the first half of last year. In fact, I've seen that in looking at the dollar against many currencies. The dollar looked weaker early this year, and now the exchange rates have returned to about where they were middle to beginning of last year. So I think that the change has been in the value of the dollar, not in the value of the yuan or other currencies around the world, and there's no evidence that it was manipulation.
Mr. Trump's combative tone has compounded fears of an all-out trade and currency war. Though U.S. Treasury Secretary Steven Mnuchin said investors should not be concerned about a currency war, the uncertainty created by escalating threats and counter-threats are already having a negative impact on businesses.
For more on the trade tensions effect on the currencies, we are joined in our Beijing studio by Xiang Zongzuo, who is the Deputy Director and Senior Fellow of the Center for International Monetary Research of Renmin University of China. Welcome, sir, to our program. Long time no see. Good to have you
Very
back,
nice to meet you.
Mr. RMB, as they say.
Thank you.
And also in Beijing, we have Mr. Xu Sitao, who is the Chief Economist from Deloitte, China. Welcome back also, Mr. Xu. In Irvine, California, U.S., we have Dan McLoy, who is the Managing Director and Head of China with the Head of Equity Capital Markets at Bostad Securities. Welcome, sir. Let me start by asking you, Professor Xiang, Mr. RMB, why there are suspicions around the world about whether China and the United States is likely to be in a war of currency? How likely, from 1 to 10, is that likely to happen?
Of course, there is a possibility, but likely, I think, right now is very low. Why? Because in these days, RMB is depreciating quite significantly compared with the level early in this year. And of course, Mr. Trump accusation of manipulation, I think, already caused some concern for international investors. So some people, particularly in the U.S., like President Trump, accused China use depreciation of the currency to counteract the so-called tariff of Chinese export to U.S. So of course there is a likeliness of so-called currency war, but very low right now.
President Trump usually would like to make a lot of accusations against a lot of people, a lot of countries without real evidence. That's one of the ways he speaks. But there are other ways that others speak, for example, maybe based on some of the facts and the numbers they have on hand. For example, senior IMF official Maury Opsfeld said that the yuan even though there are some currency movements recently, there's no evidence of manipulation. That is the quote coming from IMF. Mr. Xu, your thought about the latest movement in a way?
I think the latest movement is really not dramatic. I mean, the exchange rate has changed by roughly 5% over the period of a few weeks. So if you compare that to general strength of the US dollar, that's very much in line with the dollar strength. And many other currencies have weakened. And the currency is supposed to become more flexible. So, 5% on the grand scheme of things is really just normal trading range. But more importantly, when people look at the so-called weakness of RMB, they got to understand this has nothing to do with competitiveness. This has nothing to do with tariffs. So China wants to have corporate sector debt, deleveraging corporate sector debt, and this is not an easy exercise. So a slightly weaker currency simply would make that undertaking less painful.
There's always a chicken and egg thing. Whether the thought led to the devaluation or the devaluation of the yuan over the past few weeks, let's just say 5%, actually could help the economy go one direction or the other. That's an interesting debate going on here in China. On that, I would also like to go to you, Mr. McGlory. What about the US dollars, and what about the so-called accusation of the currency war, the pressure of that alone, the rhetoric on the currencies around the world?
Yeah, I think it's important that we make a couple of points here. Number one is obvious, and that is, China has a lot more costs than benefits of a devalued yuan. So that should be pretty clear. But also the fact that until the yuan becomes fully market-driven, it's really a policy-driven currency at this point, it will be susceptible to these kinds of attacks and accusations. And of course, being part of the special drawing rights with the IMF has really brought the yuan into the mainstream. But it's not fully there. We know it trades every day in a band of 2%, and it's set at the open by market makers. So it's not the same as the dollar, which you'd say would be maybe the world's reserve currency or reference currency. And I think you made a really good point at the beginning, which is let's understand that when President Trump says things, they're designed to create a reaction. They're not necessarily always founded in fact, and they don't necessarily always mean a policy action or a reaction. So I think keeping a level head with all the rhetoric and understanding, China wants to continue to grow as it has. It wants to make sure debt is under control. And, focusing on the fundamentals. China's always done a great job of looking at the long game and not being caught up in temporary spats. You could look at it and say, the yuan's among the worst performing currencies in Asia this year. It's way down. But I don't think China's getting too caught up in that. So it would be disingenuous for China to artificially devalue the yuan. It just runs against so many other important policy imperatives that China has.
That is the issue, isn't it, Professor Xiang? I mean, people always look at things black and white, particularly those who do not necessarily have some information or knowledge about how economy and financial system works, and therefore look at one issue as if all the other factors are changing as a result of one issue, but actually it's not. For example, about China's own economic balance and its reform agenda. We know financial sector is one of the most important ones. Professor Xiang, how is the recent debate about RMB likely to help us clarify even further about where China wants to go, financial reform?
We have doing so-called reforming exchange rate mechanism, RMB, for more than almost 50 years, since the year 2005. So now exchange rate RMB is very much flexible exchange rates. And so the movements, depreciation, appreciation, just as Mr. Xu mentioned, is totally market-driven. It's not policy-driven. Certainly, I think from policy perspective, there is no reason for government to manipulate depreciation, because depreciation, some people think will help exports, but will hit imports, will increase the cost of imports. So on balance, I don't think there is a reason for our government to manipulate exchange rates. We will move forward, I think, even more flexible exchange rates, and of course promote so-called international use of currency, and gradually to realize the convertibility of our capital accounts. I think that's the general line of our exchange rate or currency policy.
But Professor Xiang, I have to say this. I mean, with the rhetoric war that is going on right now, with President Trump, like it or not, around the world, that he is most frequently quoted leader of the world, I guess, in a way, and therefore this attacks, whether it's true or not, will have an impact. But the question is, will it have a dampening impact on China's RMB, particularly during its process of internationalization? Even though it could be unfounded, even though it could be actually just rhetoric rather than essence itself. Professor Xiang, how should China react to that?
Well, I think we will insist our established policy to do our things according to our goal. For example, we will promote further the mechanism exchange rates by market-driven movement. Certainly, we want to promote, trade settlement by RMB and also international financial settlements by RMB. For example, we are moving for a debt issue, the RMB debt issue internationally. So even there is pressure by from outside, from President Trump and from others maybe, I don't think they will not change our policy significantly. Of course, there is impact on investor psychology, so which of course will have some impact on exchange rate movements. But I think that's only side effect.
Right. Mr. McGlory, since we're talking about investors' psychology, I guess that's something you are quite familiar with. What about that psychology as a result of this rhetoric war?
I think when you take it to the level of investors, they're much more informed, they're much more discerning. I think what we're hearing in these attacks, as you're calling them, is really a populist messaging, and that's designed for a certain base, and it easily fits into the rhetoric that the Trump administration has been putting out since before he was elected president. So I think, to your question, when we shift into the realm of investors, they are much more understanding and much more discerning of what's going on. And isn't it ironic that when the yuan was appreciating, we didn't hear anything from Washington, right? I mean, it was kind of silent on the other line. And now all of a sudden there are these calls. So I don't think it is going to overly affect international investors. I think from China's standpoint, obviously, if there's continued devaluation, that creates the possibility of capital outflows. And that's something that obviously China wants to manage, and is not something that's in the current policy. I mean, those capital outflows are fairly tightly restricted. No one wants to see a return to the panics of 2015 and 2016, where there was devaluation and then intervention, and then a great tightening of monetary policy. So I think informed investors throughout the world are taking a deep breath, exhaling, processing this for what it is, which are some very strong sound bites that are designed, if you look at the overall agenda, to create some leverage in a overall conversation between U.S. and China. I think most people are aware of that.
Mr. Xu, things are becoming ever clearer, I think, as the days go by about this rhetoric war. But having said that, though, what Ms. McGlory just mentioned is something much more important than this rhetoric war, which is what about the outbound investment that Chinese or others are having when they have yuan in hand? And also, what about the overall atmosphere here in the Chinese economy as a result of this ongoing rhetoric between the two countries? Mr. Xu.
Well, first of all, I don't think there's a confidence crisis, right? I mean, if you compare today with the summer 2015, when a very small change on RMB exchange rate actually has riddled financial market, and today I think most people are quite calm. And I think it really just takes time for economy, for corporates, and also for consumers to get used to the fluctuation of exchange rate.
That's right.
I think
it's
that's
part of the story, isn't
yeah,
it?
I think that's the main policy goal, right? Of course, you cannot have, just currency moving up and down like a yo-yo. I mean, China is not there yet, but I think just with more fluctuation, so allowing company to get more comfortable with risk management, I think that's okay. So I don't think anyone is pushing the panic button yet. I really don't think so. When you look at outbound investment, I mean, so long as China is having very high saving rate, and China is bound to export her vast amount of savings, so that story won't change. That's a long-term trend. So I really think everything is okay.
All right. Professor Xiang, here's the thing also. It's about fairness as well. And of course, after the Second World War, the overall international financial system has been established based on the reserve currency of the United States, the US dollar. And as a result of that, US has been a stabilizing anchoring of the world, but at the same time, quite taking advantage of that situation and that position. So that is the issue of fairness as well. When you have more availability of other currencies, RMB is only one of them, coming out onto the world stage, euro as well, even though European countries these days are having their own debates within their own community. But the question is, things are changing. Will these kinds of debates, particularly if it's one-sided, particularly if it's rhetorical, coming from the US, such as the US president, will it have a negative effect, on the other hand, on the, the glory and the confidence people have about the US dollar for the long run? That the government officials could come in and say to the Fed chairman, this is what you should do. And the government official should come in and say, this is what US dollar is doing, and this is what RMB is doing. That's going to be very interesting situation, unlike before. Professor.
Well, I think if you look at the actual figures in terms of the total reserve money across the world, the U.S. position in these years, particularly since the crisis 2008, has been strengthening further. Of course, so we call U.S. dollar is a so-called hegemonic currency with exorbitant privilege. So if we can say any central bank in the world can manipulate exchange rate of any currency, I think Federal Reserve can do, because they have a privilege, they have a very unique position. And in this sense, I don't think U.S. government or U.S. Federal Reserve has any reason to charge other central bank or other government to manipulate the currency. So that's one of implications of so-called privilege of reserve currency in the world.
Mr. McGlory, as an investor, how do you look at that issue, particularly when the politics in the country is getting very different from what they used to be, and it seems to have an impact on the policy-making process, at least, of the Fed?
Yeah, you're raising a really good question. And I think the point is you've done a good job of separating sort of the rhetoric from the reality in this discussion today. And when you come down to it, let's face it, despite all of the pre-election rhetoric, despite what's been said after President Trump has been in office, the U.S. has had 3 occasions now when it could have moved to the policy front and named China a currency manipulator. It has not done that. 3 occasions. And we know the criteria for doing it, right? There has to be a significant trade surplus. There has to be a material current account surplus. And then there has to be proven, persistent, one-sided intervention in foreign exchange. And you might say that China could fit the first 2 of those 3 criteria, but when it comes to the third, the U.S. has not pulled the trigger. We have not put China on that list.
Well, that's one thing, Mr. McGlory. Maybe you haven't heard my question very clearly. That is, my question is, it is not just about the Chinese RMB, whether U.S. is pointing as a so-called manipulated currency or not, but rather the U.S. dollar itself, because the U.S. dollar is the ultimate reserve currency of the world. And now you have a president who is coming out saying clearly to the Fed chairman, about the direction of policy. He wants the Fed chairman, who is also a Republican, and appointed certainly by him, even though he shouldn't have any word about where the Fed should go. But that is happening. So people around the world are worrying and concerned and say, this is making us really, you know, getting so worried because this president, who is usually good at starting rhetorical wars, is trying to point his finger at a Fed chairman and say, this is what you should do. Should we still trust in dollars anymore? Ms. McGlory, very briefly from you, and then I go to Professor Xiang.
Yeah, I think if you took President Trump literally from all of his tweets and you looked at the advice or policy direction that he would give through those communications, it spans a wide variety of areas. It is not limited to the Fed. I think after he made that statement, you heard immediately Steven Mnuchin, the Treasury Secretary, where he basically said, look, you know, the Fed has said its policy. There is no intervention. It's really pegging inflation and some other factors. And, you know, they've set their course. And so I think it's to be discounted. I don't think it's to be taken literally or seriously. And if it was only limited to monetary policy, then we might have something. But we know President Trump, he's not afraid to say things he thinks the Justice Department should be doing, the Department of Energy. It's across the board.
Okay. It's across the board and not yet having an impact. That's the argument coming from McGlory.
People concerned about it, about pressure from President on the Federal Reserve, but people don't concern very much. That's not the first time the President gave pressure on Fed. The famous President Nixon had given huge pressure on the Federal Chairman Burns. But people think, well, Nixon has huge influence on federal policy in the early 1970s. So right now, Trump gave pressure to Fed. So in this case, what's the influence? Well, depends on the Federal Chairman Powell.
Right.
I believe he will resist the pressure from presidents because independence of Federal Reserve is guaranteed by law.
Well, if it is following the law, I mean, there are many other issues that is not necessarily the case. Mr. Xu.
I think the Federal Reserve is largely independent. I think most Fed chairmen so far, I don't think they are politically acute. But if we want to criticize economic policy from the Trump administration, is when you have a very strong economy, strong labor market, and continued tax cut and could worsen trade deficit and exacerbate some of this protectionary movement, so on and so forth. I mean, that would be my criticism. But I think on the Fed, maybe we want to discount what he has said so far.
All right, we hope that would be the case, certainly by the three of you. Before we go, how should we look at this debate for the very near future when it comes to its impact on this apparent trade war between China and the United States? One sentence from every one of you. Mr. Xu, you want to go first?
I think China should take advantage of external pressure to open up domestic market. At the same time, you know, cooler heads would prevail.
Always, that is the case.
I agree with Mr. Xu. We should take opportunity to reform and open up our economy further.
That's
the best policy to counteract the trade war.
That's right. Mr. McGlory, please, final words from you as well.
China needs to stay the course. Don't be taken off agenda because of some rhetoric and some remarks, and I know China won't be. Keep focused on the objectives of the country and the greater good, and continue to manage in the way China's been managing.
We also hope that will be the same with the U.S. economy. Thank you so much, Dan McGlory, Xu Shitao, last but not least, Xiang Zhengzuo. Really appreciate, gentlemen. Thank you for being with us. And you're watching World Insight with me, Tian Wei. Still to come on our program.